Hey everyone, we're here with another episode of Stable School Podcast, now live at Token 2049 Singapore, and I'm here with JD from Lynq.
Awesome, Raza. Great to be with you today. I'm really excited to jam.
Excited. JD, please introduce yourself and tell me more about Lynq.
Absolutely. Well, my name is JD, and I've been in this space for a bunch of years. I formerly was the president of ARCA, and ARCA is an asset manager out of the United States, out of LA. I was appointed CEO of Lynq about 4 or 5 months ago. And prior to that, we had spent about 2 years building the business in conjunction with 3 different core partners. One of them is a company called Tacit, and Tacit itself is a technology provider. They're most well known for creating what I would say is the premier tokenized settlement network. They operated the Signet network as well as the customer bank's Cubbies network. So they really have been an amazing part of the infrastructure within the evolution of digital assets. The third partner that we've actually introduced is a company called T0 Securities. And they're a special purpose broker-dealer, again, located out of the United States. They hold one of 2 special purpose broker-dealer licenses, which is especially helpful for us when it comes to custody of digital asset securities.
Gotcha. So, Lynq, if you would give me a one-liner, what would the one-liner be?
I would say the one-liner for Lynq would be instantaneous real-time settlement that delivers yield back to its users.
So if you look at, let's say, stablecoin mania, all these different stablecoins, how do you guys work with stablecoins? Do you have your own stablecoin? How does it work?
Yeah, so I think there's a differentiation between regulated products and stablecoins. And I would say that stablecoins are an important part of what it is that we're doing. They'll provide liquidity for the platform, specifically in terms of on and off ramping. But there is a digital asset security that's created as part of the infrastructure that we built. And that actual security rides on the Avalanche blockchain, and it's custodied with the special purpose broker-dealer. We then replicate shares on a private permission blockchain that's operated by Tacit, and then users can move those shares back and forth while generating interest.
Gotcha. So from a user's point of view, essentially they interact with a marketplace, or how does it work? Is it like a one-click vault kind of style?
Absolutely. So we built this for institutional use cases.
Gotcha.
So in order to actually participate on the platform, you need to be AIQP, which translates in the US to having $25 million or above. So this is really kind of a big boy's toy, right? And essentially what we've done is we've created this technology that allows for the transference of these of these securities and these interest-bearing or yield-bearing tokens. So they move back and forth on the platform, and essentially they can be used for a couple of use cases. The first is simple, right? It'd be like treasury management. So let's say, for example, you've got 20 million bucks. You want to generate a little bit of interest. You can then, ultimately, enter the ecosystem, and you could then, deposit those funds there. The second, and I think one of the use cases that's most heavily used so far is actually transferring them. So you can send from one different counterparty to another. So an example would be B2C2. Right, B2C2 could take shares of the fund, which we call T-fund, and they can move them back and forth. So they could enter into a transaction with, let's say, Anchorage. And they can move $20 million worth of those shares to Anchorage. And then Anchorage on another blockchain, potentially even on Atlas, could move like Bitcoin back to B2C2. So it would facilitate trading. So it's a real simple use case of settlement. There are a couple of others, though, Raza, that are really interesting. One would be with a partner of ours that is finalizing their connectivity to the platform right now, which is crypto.com. And one could use those shares, again, T-fund, to ultimately fund an account or fund a trade. So move them from one wallet to the other. Again, B2C2 sends them to crypto.com. Crypto.com then recognizes that 20 million bucks. The $20 million then becomes buying power. And then if B2C2 then liquidates a trade, they can move those. They can move $20 million back to the platform. They can then take it from the crypto.com wallet, move it right back to their own, and then ultimately now they've got that $20 million they can deploy somewhere else.
So this is actually pretty cool. Am I understanding it correct? So B2B, big money, but Lynq is essentially like abstracting, let's say, the underlying assets away. So, do I also understand it correctly? Like to the extent you can talk about it is, let's say I have $20 million, but it could also be USDC, it could be USDT. Essentially, I go to Lynq saying, hey, treasury management, and then essentially you guys manage that pot of money. But then if I have corporate cards against it, is that possible?
Right. So let me break it down for you.
Yeah.
So the way it would work, if you're a user, you have to onboard with the broker-dealer. So that means doing AML KYC and a whole bunch of other different things.
Yeah.
Once you've done that, then you'll receive instructions on how to participate in the ecosystem. And the way you would do that would be sending a wire. I know it's kind of antiquated, but you have to send a wire, either ACH or SWIFT, directly to US Bank. And US Bank's the banking partner for what we've done. Cool. Once those funds hit US Bank, they're actually then translated and US Treasuries are bought. US Treasuries are bought through the actual other partners that we have, Cantor Fitzgerald, REL Partners, and Hidden Road. So once those treasuries are bought, we then replicate those shares in the private permission blockchain and allow for users to send them back and forth. So in terms of like USDC and Tether and where that would come into play, those stable tokens themselves can be sent to a different user who already have interest on the platform. And they then, once they're on the platform, can use the T fund to send back and forth to others.
God. So will these digitized shares be tradable, or is this something that only the client holds?
It's such a good question, right? Because everyone asks that. It's like, oh, do you guys have a token?
Yeah.
Right? like when are you listing it? Where's it going to go? How do I buy it?
Right.
But the token itself has a stable value, right? It's going to be a stable value of $1. And the only way really to buy it is through the flows I mentioned before.
Got it.
And then they're custodied actually at the special purpose broker dealer. So they don't move around on a public blockchain, although they are issued on the Avalanche blockchain.
Interesting. Is it somehow permission? So do you also like actively prevent it from, like, let's say, leaving that permission blockchain? So essentially you can regulate it and make sure that, it doesn't get out of control, so to say?
Yeah, so we operate a private permission blockchain, and that's what the tacit technology is built on. And that's done for a couple of reasons, right? The first, obviously, is for security. And I would say that this is really mission critical technology that's been built. The second reason, obviously, is for privacy purposes as well, because you're dealing with large scale transactions. You're dealing with information flow that ultimately could be important to other industry participants if they found out who was transacting with who, what the dollar values were, when those transactions happened. So I would say that kind of the private permission element that we've got on the Lynq platform is really critically important for ensuring comfort and stability, and also really letting the clients that are using the platform recognize that their data is going to be protected.
So is it only dollars, or are you going to have different FXs?
It's a great question as well. So originally when the platform was operating within the banking infrastructure, it was strictly for US dollars. But when we were planning this and working with our partners, P2C2, Wintermute, Galaxy, FalconX, Crypto.com, Fireblocks, and a whole bunch of others, we surveyed them and asked them, kind of what their needs would be. And there were a couple of key important things that they had said. The first is that multi-broker functionality would be important. So we built for that as well. The second was also multi-currency, right? So currently we're operating in a US dollar environment, but there's nothing to say that moving forward that we can't work with G7 currencies specifically, right? And the third thing really is multi-asset capability. So in the end, in future iterations of what we're building, there may be places where stable tokens themselves could have reserve assets that are on our platform per se, or a whole bunch of other implementations that we're thinking about.
So if I would like summarize this or translate this for myself, essentially, JD, what you're saying is this Lynq wants to be the ultimate treasury manager, where, let's say I'm a company or startup or like, whatever, I have, let's say 20 million, I come in, trust Lynq, put it there, capital is working for me, might want to diversify underlying assets, but I also want to use it. And I'm just able to do so.
That's right. That's 100% it. Think about having your pot right there, 20 million bucks that's there, being able to deploy it whenever you want, and also generating interest on it. And the coolest thing that we had done, and we spent 6 months building this functionality, and it's also patent pending in the US, is a concept we call interest in transit. And what interest in transit really does, it allows for you to generate and collect the interest that you would have. But let's say, for example, in the example I was giving before, B2C2 sends those funds to Crypto.com. B2C2, if they hold that for 12 hours of the day, and then Crypto.com holds that for 12 hours of the day, that 20 million bucks, the interest that's generated on that will then be split 50%. And we can do that down to the 2-second block.
Wow.
So think about like high frequency trading and how that operates, and think about how this industry is going to evolve over time. As transactions are happening, clients are settling, funds are moving back and forth, the interest that's generated is actually going to travel with the actual asset as well.
Streaming.
100%. I like that, streaming. I'm going to use that.
Yeah. There's smaller DeFi protocols have been trying to do it, but inherent blockchain limitations. But obviously, when you regulate the chain and are in charge of, let's say, the asset flow, this is an unlock that you have.
That's right. That's right. And I think that it's something that's really been appealing to a lot of the folks that have onboarded already. Right?
I mean, time is money. I mean,
100%.
if it moves along, like your capital efficiency skyrockets.
100%. And Raza, it's funny. I was talking to one of the big banks, not big banks. And I was talking about this, and we were talking about how it is that we deal with the generation of this interest, right? And how we deliver it back and forth. And remember that if you're, a traditional money manager, right? The way that it works, the interest is either, delivered at the end of the day, or more importantly, if you're invested in a fund, like a money market fund, it's delivered at the end of the month. So it is a cataclysmic shift in the way that that interest is generated, but more importantly, delivered. And it's something I would say that, when you think about the banks, they're not going to appreciate, because at the end of the day, they're the ones that are holding, all that interest up until the end of the month and doing what they want with it.
Yeah, and again, from the bank's perspective, I get it, because the longer you hold on to cash, the longer it works for you. And that's obviously on the spread. That's where they make money. 100%. I used to be an accountant, so intercompanies, money in transit, very familiar with that. Actually, I have a question about that, which is, how do you deal with the settlement? Because different accounts, money flowing around, what's the system behind it?
Yeah. So in our term, settlement really is used when we're talking about the transference of those T-fund shares, right? So in a trade that happens, a $20 million example I used before, clients have to settle, and they'll do it in a couple of ways, right? Either you can do it real time, you can batch it, and there are a couple of different deployments that we're actually working on right now. The easiest use case, like I said before, is that point-to-point, right? That business-to-business settlement. But there are other settlement layers that we're creating right now for third-party clients, right? So think about an exchange that has a one-time day settlement. They allow clients to trade all day long, but at the end of the day, they net that out and they move funds once a day. We're now working with one exchange and one ECN to build out those deployments to allow for our settlement layer to sit on their exchange and allow for funds to be transferred between their clients that have accounts on Lynq. So settlement, is complicated, but I like to think that we've streamlined it.
Nice. Yeah, a little bit more about the money stream or the interest that is able to move along. Does that play a role in the interest you are able to generate? Are you able to generate more interest because of the interest moving, essentially you're giving it back, quicker? So compounds quicker. Is that a way to look at it?
Yeah, I think that's the question we get all the time, right? Like, where does it come from, right? Yeah. Where are you getting it from, right? And I would say that that's one of the things that's gotten the industry in trouble in the past, right? The rehypothecation, investing in other instruments that aren't regulated per se. This portfolio is allowed to invest in only two things. One of them is cash, and the other one's pretty obvious if you can figure out what it is. It's an interest-generating instrument that ultimately right now is set by the federal regulator.
Yeah. So essentially like something like T-bills. Yeah, gotcha. Okay. Really, really cool. So you already talked about a bunch of edges, I would say, Lynq has. You spoke about inference moving along. Yeah. If I may put it in my own words, seamless user experience. It's almost like a one-click deposit, and you guys actually abstract a lot of complexity away. You allow for assets like Circle and Tether. You accept these stablecoins, not directly, as I understand it, but tradable against the digital shares that are issued by Lynq. What other edges does Lynq have, for the customer that provide value?
Totally. I think it starts with the actual clients that are onboarded, first of all. We're creating a community. We've got over 20 clients that are already onboarded, and there's some pretty big names. Folks like GSR, right? Wow. Folks like, DV Trade, folks like STS and, QCP. These are all the kind of folks that are already in the ecosystem, in addition to the names that I mentioned before. And there's many, many more that are coming, right? We also have exchanges that are coming on board, and like I said, stablecoin issuers. So we're building a community, and that's super important, I think, because this is a network effect. There's a flywheel that we're creating. The second thing that I think is really cool about it are these third-party integrations that we're doing that are allowing for us really to force magnify, the ability of what the user can do. Another example that I'd give you is really cool, right? So we're working in partnership with Fireblocks, right? And what we're doing with them essentially is allowing for us to do DVP, right? Which is super cool, right? So now what we're talking about is taking a custodian that ultimately has a digital asset that's in there that a client has, allowing for them to use the cash leg, the settlement layer, using Lynq, and then ultimately moving the physical asset as well. So I think that these integrations that we're working on, and there are many more that are going to come, are really, really interesting. The final integration that we've got that's going to help us really, force magnify our ability to really make the user experience at Lynq really meaningful is a relationship we just announced with a company called Bridgeport. And Bridgeport's a middleware supplier. So essentially what they're doing is they're writing to our API at Lynq, and then they're writing to other exchanges that are out there as well. So allow for our users now to access different marketplaces and using the funds that they've got on our platform, T-Fund, as good collateral in order for them to trade and do many, many other different functions.
So you mentioned a bunch of integrations. Can I categorize them? So I would say, integration with centralized exchanges, essentially as collateral purpose. I think very clear. I do want to touch upon that. It's trade for trading purposes. The user clients want to trade, but payment. You mentioned, having integrations essentially like for settlement, like on the cash leg, let's say with Fireblocks. Is that going to be a Lynq card, or is that going to be?
That'd be so cool if there could be a Lynq card, right? I mean, I'm thinking about how great that would be. I don't know if we could have limits great enough for some of the size that these guys are slinging around right now. But I think that, that is an extension of something that, I would say is probably not on the roadmap just yet.
Right.
I think that the roadmap right now has us doing a whole bunch of different things. It's boring deeper and deeper into the user experience. And I'll give you an example what that could be. How cool would it be if, let's say, you transfer some funds on platform, you end up settling with the counterparty, confirmations are generated as part of what we've done. We built in an AML KYC hub, we built in a confirmation hub. But what if you could take that confirmation and it could flow straight through to your mid-office systems, right? Your EMS, your PMS, your back office systems. So with one click, you can settle a trade and you can book it into your systems as well. I think that's really meaningful, and I think that that's really, a page out of what you see in TradFi, but even more enhanced.
Is this suitable for high-frequency trading?
Absolutely.
Can you explain a little bit more?
Totally. So I would say that for high-frequency traders, right, the answer here for us is how many exchanges can we connect to? So it's really a collateral game, right? So high-frequency traders essentially are, as you know, they're arbitraging markets across different geographic regions. They're looking for discrepancies in price markets. So essentially what this would allow for them to do is move funds swiftly and efficiently from one central part to those different entities, right? So think about if, let's say, on my platform, I'm moving funds directly from crypto.com. Turns out there's a dislocation on another market, LMAX, for example. Move the funds right down, move them across, move them straight up to LMAX, and then go ahead and capitalize on what that transaction is.
Interesting. So again, I love to think about it from a user point of view. I've got, let's say, 50 mil, come in, deposit in Lynq. But I do a business, I'll name the names, but let's say Binance, Mexi, Bybit, whatever.
Sure.
Set up 5 exchanges. And then when I go to these, so what is the interface? So when I go to, let's say, exchange number 1, what do I see?
Totally, you're right. We skipped over all that stuff. So let me double click on that.
Yeah, please.
So essentially, what we've created through the platform is there's an interface, and the interface itself allows for a user to send the funds. It would be simple, right? Drop down here. What account am I pulling my funds from? What is my dollar amount, and where do I want to send it over here? So that's the way that you would actually do that. And then there are a couple of different buttons on the right-hand side, the upper right corner, which basically would allow for you to transfer. So that would be a send functionality back and forth, and then you've got the ability to go ahead and redeem. So what we haven't talked about yet is what if you want to exit the platform? We talked about entering the platform, right? So you would basically send funds to US Bank. Well, the exit point would be the same thing. So every hour, we strike NAV, net asset value, and we do that in order for us to enable $1 value of each of the shares. But in the event that you want to actually redeem if you want to actually redeem from the platform, you'd go ahead and click on the redeem button, and we allow for those redemptions to happen on an hourly cycle.
Got it.
So every 59 minutes and 59 seconds, we batch together all the redemptions or the subscriptions as well. And whether net long or net short will dictate whether or not we're going to go ahead and create new shares or we're going to go ahead and burn shares from the fund.
And so the shares also are sort of like a guarantee or a receipt for whatever funds I deposited in Lynq.
100%. And it's fully transparent. Because they're created on the Avalanche blockchain, what you end up seeing through the Explorer is what the shares were, what the total value is, and there'll always be a one-to-one balance between what's on the private permission blockchain and the shares that are issued on the Avalanche blockchain.
So if let's say I'm trading on centralized exchange number 1, but my account is growing.
Yeah.
You will issue shares against.
So what would end up happening, let's say, for example, you're crushing it over in Bitcoin or whatever it is on exchange number 1. You recognize that, you've set a predetermined limit. You've hit that limit. You can liquidate your position there on that exchange. That'll give you a dollar value. Let's say you start with 20, you got to 40 million, that's great, crushed it. Take the $40 million, and then you could send it from the exchange back to the platform. As soon as it hits the platform, interest starts getting generated again, considered to be treasury management, and then the next strategy comes to play, 5 hours, 10 hours, 24 hours, then interest continues to be generated, and then you can deploy it accordingly.
Gotcha.
Does that make sense?
It does.
Cool.
So it's essentially, again, Lynq, my nucleus, I'm looking at the interface, and essentially Lynq is just making sure that wherever I want my money to go, you can, I'll be able to send it there, back and forth seamless.
Totally. Provided that you've been AML KYC to the broker dealer, you can do that. Yep. There is, so in terms of the interface, that's interface number one that you can use. Mm-hmm. The second one would be the API. Right? And the technology that we're using, which was created by Tacit, had in its day over 600 different clients that had written directly to the API. It's a meaningful number, right?
Yeah.
They also had over 2,000 users on this. Wow. So this really is a battle-tested technology. The other point that I think I'd say about the technology is that it managed seamlessly through the demise of Signature Bank, which were some very volatile times. And it also saw an upwards of almost $3 trillion worth of notional value transacted on platform.
Wow.
So we're dealing with some industrial grade technology, as you can imagine.
Yeah, that's great. Actually, while you were talking, I was thinking, how long did it take to build everything? Because it seems like a machine that you guys created. I'll be very honest, it's not like very intuitive. I was actually one of the questions is like all the stablecoin mania. What are your thoughts, right? The rise of stablecoins and what does it mean for Lynq? But it seems like you guys are operating in a slightly different corner. You already mentioned B2B, institutional grade, but also money still doesn't always move efficiently. Right. And I see this as a very smooth, efficient way of making. So my first question, how long did it take to build everything?
Right. So the technology was in development dating back to 2018. Wow. That's when it first went into production. And at that point, there were a couple of clients that were onboarding, and it was being used for tokenized cash deposits, right? So similar to some of the deployments that are out there around the world. There's a couple. Right? There's, Bank Frick, there's BCB, there's Customers Bank that are out there, but they all have limitations on themselves. And we're not going to get into that on the show here, but there are some, deficiencies that exist there. So this technology grew, tremendously to the numbers I said before. And then we actually took it off the market, when Signature Bank went away, right? It wasn't being used. And then the team at Tacit spent about 2 years or so retrofitting it. Really putting the enhancements that were required in order for this to be something that's sustainable for, a decade or more in terms of what the growth trajectory is going to look like.
So it seems like, Lynq is gaining traction. What is the catalyst? What was the catalyst? Like usually it's a partnership or it's an edge in tech. Yeah. What was the catalyst for Lynq?
I think there were a few. I think the first thing was that this was something that was there and then it wasn't, right? So you had 2,000 users that all of a sudden had a tool that was essential to the way that they conducted business, and it evaporated overnight, taken away, not being used, decommissioned. So I think that, when you talk to folks in the marketplace, when you mention Signet, they say, wow, that was something that was great. I missed that. And we've really bought that back, but bought it back on steroids, right? We've made these enhancements I mentioned before that make it more user-friendly, that have greater functionality. And then it's the community of users we bought in. And we were really fortunate that B2C2 and Wintermute and FalconX and Galaxy and Crypto.com, had the courage in the early days to step up and say, yeah, we believe in this vision, we believe in this business, and we're going to back it. And throughout the process, what they've been doing is referring in their biggest clients, allowing for them to get on board with the broker-dealer. And just now we're beginning the process, since we've only really launched the platform about 6 weeks ago, of actually really utilizing it in a way that they've wanted to use it for, the 3 years or so that there was not an option for them to use. So I think that those are probably some of the ingredients. The other thing I would mention before is that liquidity is important, obviously, right? Yeah. And our goal really is to recreate that community and to allow for the liquidity to exist for all the users.
So, one of the questions I had was, what are the fees involved? Traditionally, when money moves, it costs money. What is that like with Lynq?
Yeah, so that was one of the questions we asked our early users, right? It's, where's the revenue to come from, right? We've been building this business for 2 years now, right? And we finally got into market. We got to make some money. And, the thought was, you've got a bunch of ways you can do it. What are, some of the competitors doing, right? Stablecoin issuers as well, I'd put in that category. They're charging fees for create, redeem. Well, on some of the platforms, there's transfer fees. There's minimum balances, right? There's onboarding charges as well. Our model is slightly different. We simply take a small portion of the yield that's generated, and we basically take a small portion of the interest that's been generated, and we take a small delta of what that looks like. Gotcha. So we charge 80 basis points, essentially. We take that off of the yield, and that's actually from almost everybody we talk to in the marketplace. The answer is, look, we're not getting yield anywhere else, so we might as well, embrace the 80 basis points we're talking about.
I think it's also very aligned with your customer base, right? Because essentially you're saying, you get a return on your investment. That's when, you make money, I make money.
Right, I think that's right. And it's not like, some of the bigger stablecoin issuers, I mean, you deal with this all day long on the show, right? What are people saying? All they're saying right now is it's not fair that we don't get, kind of the interest that's generated from the stable tokens. We're the ones that were out there that helped to create the business, but then we sit there and watch every quarter as there's billions and billions and billions of dollars that's revenue generated that we don't get to touch.
Yeah. Touching upon stablecoins, rise of stablecoins. Yeah. We spoke about it briefly offline. What's your take on, let's start simple. What's your take on stablecoins?
I think it's miraculous, right? I mean, the growth of stablecoins is just miraculous when you think about it. It's amazing. When you think about the original use case, when Tether first came on the market, it was simply used, as a conjunction with iFinex in order to get, or a Bitfinex, sorry, under iFinex, in order to go ahead and get, transfer value directly to the exchange in order for clients to be able to fund an account. Now, when you look at what's happening in the marketplace, you look at the different use cases that are out there. You look at retail users now embracing, especially here in Asia, by the way. It's quite different than it is in North America, right? The voracious appetite that you see. And a great example would be even last night when I was taking a cab ride home. The driver asked me, "Oh, are you here for token?" Right? And the interest that was being, not interest in that kind of a way, but the interest that this young man had. And the dialogue and the discussion, how educated he was amazing. And I think that's really part of what's going on. And it's all driven by, digital assets, but more importantly, stablecoins and the use cases that are there, because that's where folks are going to gravitate immediately, right? We're talking about a contactless society. We're talking about all these different motivating factors moving forward, AI movements, how are machines going to interact with each other on a go-forward basis. When you begin to think about all that, it's quite mesmerizing. And the real nucleus of it all is in the stable token.
Yeah. I was flabbergasted when, I won't name the podcast, I was listening to one of my favorite podcasts, and the guest on the podcast was saying, I bought this watch with USDC. And I was like, what? I had to go back and listen. Did he just casually drop USDC? And so I definitely wouldn't have guessed that stablecoins would be the gateway to adoption, or such a big gateway. I think there are multiple. But for sure, it's a huge one.
You know what is interesting, by the way, when I think about it, right? Not to interrupt you, Raza, but it's funny. You go back 3 or 4 years ago, and the question was, will CBDCs dominate or will stable tokens dominate? You don't even hear anybody talking about CBDCs anymore. True. When's the last time you heard that acronym?
A minute. It's been a minute.
Right?
Yeah, it's ironic. I think that, though I will say I've been in crypto long enough, it was supposed to be NFTs, and then, after that, I think chains and their tokens, altcoins, meme coins, etc. There's been a lot, but I 100% agree. I also feel like it's merging. When it comes to RWA, stablecoins, or CBDC, but you see stablecoins, hot take, most stablecoins are in stablecoins. They're more of a financial instrument abstracting away an underlying strategy.
Right. And I wonder actually if the reason why stable tokens are the gateway is because they're so easy to understand, right? One-to-one backing. That's it. It's just a replicate. And maybe it's an extension of, dollars then became credit cards. Credit cards now are being moved towards stable tokens.
I think you put it very sophisticated. I remember when Reddit was very toxic towards NFTs. They launched a project called Digital Collectibles, and it was gobbled up. And so I literally said this a few nights ago where I was like, there was this project, I was advising them, and I said, well, I understand all of it, but you have to put coffee-backed stablecoin. Right. If you don't, people won't understand it, people won't buy it.
And maybe if you think back, it's funny, right? So 4, 5, 6, 7 years ago, you'll remember that backed, and obviously there's backed. They've got the custodial network that's out there. What did they begin with? If you remember, they began with the Starbucks Rewards Point card. Yeah. Remember that?
Yeah.
That simply, I assume, in the background was simply a stable token that was mirrored via a card. So it is interesting to think back, how, so many people actually had really thought about this early on, right? But maybe hadn't capitalized it because they were just too early.
Yeah, I think that's a bunch of these trends where I see in the Cosmos J ecosystem or different ecosystems, they were too early. That's really the conclusion. What does the rise of stablecoins mean for Lynq?
The rise of stablecoins means a lot for Lynq. We talked about how the operations work, but the one thing we didn't talk about was off-hour liquidity, right? And, we're beholden to a bank. Our banking partner is US Bank. US Bank operates in US hours, not on weekends and not on holidays. So our platform operates 24/7, right? So you can seamlessly move funds back and forth. But after, let's say, 4:00 p.m. Eastern time, you've got to hold funds on platform unless you've got a way to get them off. So there are two ways to do that, right? The first way would be transferring T-fund. And I'll go back to my examples I've been using all along, from, let's say, Galaxy to B2C2. B2C2 then, if they want, they can redeem during the hours. But after 5 o'clock or after 4 o'clock, they've got to figure out how they want to go off platform. There are three ways. One, they can on-ramp to an exchange. So in that example, they can on-ramp to, crypto.com. They can transact and they can pull, Tether, USDC, whatever they want off of the exchange. The second way would be entering into a transaction whereby Galaxy then sells $50 million to B2C2. B2C2 holds the T-fund on platform, generates that interest, overnight, but then off-chain sends that stable token back to Galaxy on whatever chain they want, do whatever they want to do. But the third and the coolest piece of the puzzle, it's really the third leg of the stool that we've built, is the integration of stable tokens on our platform. And this is where it just gets so cool, because I can take funds, I can move it directly to a wallet of, let's say, Tether. Tether then can recognize that as a subscription. They can then mint new Tether, which is critically important, and send that to the client on whatever blockchain they want. So the stable token and the role of them for off-hours liquidity is critical. It's critical.
And so again, me from a product point of view, so when I see the UI, do I get to pick these choices, or is it like
back to the drop downs that I was talking about before? Just you
pick.
I've got my account right here, and I'm sending it from my US based account, and I'm sending it directly to Tether.
Oh, beautiful!
Right?
So do you guys issue virtual bank accounts yourself, or is that in conjunction?
It's all done through a broker-dealer network.
Yeah.
So the special purpose broker-dealer, that's the role that they play, is that we've taken this outside of banking infrastructure. So the client actually receives greater benefits, right, by doing it this way. We're able to offer clients a bankruptcy remote structure, meaning that if the issuer, which happens to be ARCA in this case, goes away, it doesn't matter. Your funds are hanging out at US Bank, bankruptcy remote, segregated account, and then they'll be given directly back to the user after ARCA's problems happen.
And I understand if we can't touch upon this, but can anyone in the world just access Lynq, obviously provided they go through AML and KYC? That's
right, they can. So the only other gating factor is that this is an AIQP, so it means you need to have over $25 million or above. Yeah. If you can qualify through that, then find us at lynq.network.
Amazing. So tell me, 2025, it's 2030 now. Where's Lynq?
God, if we do our job right, this should be a fundamental part of the infrastructure of the way finance, not crypto, but finance operates.
I love that.
Yeah, totally. So I think about what comes next, right? So day one, we're dealing with digital assets in the digital asset space and dealing with the use cases I mentioned before. But there are a lot of other different financial participants that are going to be entering the ecosystem. What's their biggest concern? Their biggest risk is counterparty credit risk and time. So in a scenario whereby, let's say, a bank A, ends up wanting to step into digital assets. Meaningfully, I think that the way that trajectory works, they start, dealing with stable tokens perhaps, but probably before that, they're dealing with things like ETFs, right? That can get exposure, but it's synthetic, as we all know. But at the end of the day, when they want to start dealing in, digital assets, and let's say we start with Bitcoin or ETH and work our way down to Ethereum or Cosmos or whatever it might be, they're going to have to go ahead and deal with the public blockchain. Public blockchains are fast. We know that, right? That's that transference layer. But if they're not comfortable yet, right, and let's assume they can't embrace stable tokens, or they're not allowed to embrace stable tokens for whatever reason, and some AML KYC considerations, come to mind there, then their natural default from their risk and compliance groups are going to be, okay, well, just take a wire or send a wire. Well, there's a huge time delta. between when that wire is going to be sent or received and when that digital asset is actually transferred. And the digital asset space obviously has tried to overcome what that looks like with who sends what when and what that order looks like. And there are airlocks that actually exist as well where folks can send different through different custodial solutions. They can send their assets. Once one's recognized, it releases the other. And there's a whole bunch of solutions that are out there. But for somebody in TradFi who's coming into the space, this is an ideal way for them to know that they're dealing with trusted counterparties, all AML KYC'd already, and it solves their issue with timing, right? So now, you can send T-Fund on platform, which is interest bearing as well, which is a great side effect, but you could send that directly to the counterparty. Once they've received it, they can then send the asset on the public blockchain. So I think that Lynq actually is going to be an accelerator for bringing digital asset participants into the market.
Do you think that KYC and regulation is a problem? And I'll give you more context. Crypto started out very rebellious. DeFi, decentralized finance. The reason why it exists is because you see more products coming out of there, like perps and dexes that prior to them existing, you'd had to go through a centralized exchange and KYC, etc. And crypto was sort of like very rebellious, saying like, you own your own data, privacy, etc. And then you have access to infrastructure. Now, obviously, it's a double-edged sword. Like I'm asking the obvious question, but how do you view, let's say, utilizing KYC in crypto, or like you're using crypto as technology?
Yeah, there's always been this rub, right? And I learned it first when we created the first treasury fund in the world. ARCA itself issued a product called the ARCA US Treasury Fund. And the ARCA US Treasury Fund went effective with the SEC on July the 6th of 2020. These grand ambitions of what this could be used for, right? It's going to be great. It's going to be collateral. You can send it to Maker. It's going to be amazing. And then right away, the friction started coming up. And the biggest piece of friction was AML and KYC, right? So how does DeFi deal with that? And that was in 2020. We're in 2025, and no one solved that yet, right? So I think that there's going to be two different evolutions, right? There are going to be regulated products that are out there, and then there are going to be products that ultimately aren't going to fall under the jurisdiction of the SEC or the CFTC in the U.S., right? And that's a U.S.-specific example, obviously. So AML KYC is something that the users that we have, in certain use cases, specifically this one, are going to desire. They're going to need it. They're going to have it. But that's not to say that they can't use other instruments that'll be acceptable in different pools or in other, DeFi applications that ultimately that they're going to be able to use.
What are you most excited about the next 5 years around stablecoins?
Yeah, the adoption of what comes next. Like, I can't wait. Like I said before, I think that stable tokens are going to be the gateway for so many different use cases, and bringing what I would say is, an industry that has been suffered from being a punching bag for a decade or more. And I think that this is probably the time and the place where folks can gravitate to a use case that makes sense for them. They'll understand the concept of a wallet. They'll be using their telephone for doing these things. And these are just kind of, the ambitions and, kind of what I think that so many people in this market have been striding for so many years and building towards. And we're finally getting there.
Do you think at some point, side tangent, but DeFi and Tribe will just completely merge?
I think about this all the time, right? Because as I said before, the biggest issue here is AML KYC. So, if at the end of the day, and why is that? It's because of, what happens if somebody ultimately touches something that's bad and they're not supposed to. And how does, let's say, JP Morgan handle that situation if they find themselves in possession of a stable token that was touched by, not picking on them, but let's say, kind of a North Korean, right?
Sure.
What do? They've got a fiduciary responsibility to their shareholders. They've got an obligation. They've got regulations they need to adhere to. So I don't know, right, how you overcome that and how you get there. You keep hearing about all the different projects that are out there right now, which are trying to streamline AML KYC, trying to bolt on properties to different tokens, trying to understand what the provenance is and what it was and where it came from. You've got, Chainalysis and all these different firms that are out there that are, kind of have products out there to try to, help you understand that. But we're not there yet. Is it going to merge? I don't know. I mean, the optimist in me says it has to, right? But right now, I don't know what that path looks like. But, I also didn't know what that path would look like in 2018 or 2017, when, we started thinking about what a treasury fund could look like.
Yeah. One of my last questions, a bit of a boring one. Like I said, I'm an accountant by profession. So at some point, do you see that you might provide other services like maybe, I don't know, insurance, or is it like, is there ways where you'd be able to like say, hey, you've got this capital with us, it's working for you, and then, you know, these kind of services? And are you then like worried that you might like, because I guess you're bound by US GAAP, but like, you know, when you go into different jurisdictions, you get into IFRS, when you go into like, you know, more banking services, Basel III, and then Solvency II for insurance, like how do you challenge that view, like from an overhead logistic point of view?
100%. So first thing that we've always, the guiding principle for us has always been regulation first, right? 100%. Operate not in the gray area, only operate in, you know, what's regulatory, has regulatory clarity, and there's a path. And that's the beauty of what we've built at Lynq, is that it's a regulatorily compliant infrastructure, taking a patchwork of different licenses, bolting them onto a technology, and allowing for clients to utilize that in a way that I would say is 100% regulatory compliant. With reference to other use cases that are out there, absolutely. You know, you mentioned insurance. I think about insurance all the time, right? Because you've got statutory capital that's out there. Statutory capital is, you know, treasuries. Statutory capital is, you know, dollars. Statutory capital is a combination of both. So taking shares of the fund, taking T-fund and being able to use that as collateral for stat cap, logical, makes total sense. I think that if we do our job right, what gets me excited about all this is what's to come. If we're able to go and bring the community of users, and we could start working first in digital assets, traditional finance probably comes next, but there are so many other use cases that are out there, right? Shipping, logistics, any industry that has a problem with time, we could solve for that, and we could actually enhance the way those flows work.
Amazing. JD, is there anything I missed, I should have covered, or you want to share about Lynq?
Yeah, all I could say is that you know, I think we've covered a ton here. I think about Lynq, and I think about, you know, what we've built already. I think about how we're, you know, really building this utility layer for the industry. And if we do our job right, and we can actually create the ecosystem that we believe that we could create, I believe that Lynq, to your point before, you know, not 5, not 10 years, but maybe even for 20 years, will be an important piece of infrastructure that others will build upon, and really will be the base layer that'll sit for settlement above the banking layer.
I really enjoyed this conversation. Lynq is definitely a different product than usually from the guests we get on. It's in a different corner, but I can see the problem that you're solving, which I always love. I think in crypto, often I'll talk to protocols and I have difficulties articulating what is the problem that you're solving. And I think that you did, you know, explain it very sophisticated. Thank you so much for having me on. And so what's the website where people can find it?
Lynq.network.
Lynq.network. JD, thanks so much.
Raza, this is awesome. Thanks for having me.